traders believe there's this one holy grail concept, and I'm here to tell you that that actually doesn't exist. As someone who's been in the market for so many years now, ups and downs, profits, losses, break-evens, tried several strategies ranging from trend line, MACD, EMAs, smart money concepts, price action, support resistance, and so much more. I can't even remember some of the strategies I've tried. And I can tell you for a fact that I've seen people make money with the weirdest strategies. Bat strategy, cup and handle strategy. I've seen people make money off every single one of them. So in this video today, I'm going to share with you what is actually most important about a strategy. It's not how complex it is that makes it better than the other. The only thing that is going to make your strategy phenomenal is you being disciplined, you being patient, you having a well-defined trading plan. What are the things you're looking at to see before you take a trade? And despite the fact that you want to see certain things before you take that trade, it also isn't a guarantee that the trade is going to work. The trade is still a probability. You can literally see every single checklist, every single thing on your checklist, and the trade is still gonna hit your stop loss, and then you're wondering, what's going on? And that's trading for you, and that's what makes it unique as well. That everyone can have their own strategy and they can still make money with their strategy. No strategy, in my opinion, is inferior to the other, and no strategy is superior to the other. The only thing that matters is how do you use your strategy? How do you apply it? And always using good risk management. If you can't use good risk management on your strategy, it's always going to fail. It doesn't even matter how long you've been trading, whether you've been trading for 30 years or you've learned from someone who's traded for the Central Bank of America or Central Bank of England or whatever. It doesn't even matter. If you're not using good leverage, good risk management, you're going to fail in trading. So today we're going to use US NAS 100 as a point of reference for this topic today. And so far, as you can see on US NAS 100, I do have a lot of things on my charts, and I'm going to explain it all. So overall, let's first look at the 3-month time frame, and I'll wipe everything on my chart firstly so we can start from there. Overall, on the 3-month time frame for US NAS 100, I'm very bullish. I don't even see any bearish signs on this. In my opinion, I want to see this rip with what it looks like on 3-month time frame. I want to see a rip, go to the upside. That's all I want to see. Now, my overall market direction on US NAS 100 is to the upside. But this doesn't mean that price cannot decide for whatever reason, maybe economic reasons. It doesn't mean that price cannot say, I want to come down, and we see price come to the downside. Probably, maybe to mitigate this inefficiency here. Or maybe because this overall high-low that got broken, price may want to come back for a retest, to retest right there, mitigate this, or liquidity here. Price can decide to do that. Why? Because nobody can actually predict what the market will do. We are not here to predict. My job is to analyze key levels for buys, key levels for sells. And right here, I'll put everything back on my chart. We go straight to the monthly time frame. And I'll remove everything once again on the monthly time frame. And on the monthly time frame, you can pretty much see we have a very significant overall swing high, swing low, break of structure, last down close candle that broke that structure here. So after this impulsive move, we saw this decline here, and after that, price impulsively rejected, showing signs of bullishness. Now, despite the fact that we're showing signs of bullishness, it's not a guarantee that we're going to create a new all-time high. But us seeing these signs could potentially mean that the market wants to continue higher. But as an analyst, what do? I'm looking at data from the smaller time frame, bigger time frame. As you can see, 3 months is bullish, monthly is bullish. My overall bias is bullish. Now, I'm still taking note of this key level. Why? Because it was the last down close candle before breaking this significant structure. That is the reason why this is a very important key level for me. Now, if I remove every single thing on my chart and I draw my fib from here to the overall high, you can actually see that if we've topped out here, if we've topped out here and there's a potential decline, or price wants to decline from this position, and this right here is us creating topping out here and price potentially looking for potential opportunity to decline, where will I anticipate for price to decline to for me to be comfortable to buy? It's going to be below equilibrium, and this is equilibrium. What's below equilibrium? Discounts. What is below this equilibrium? Inefficiency. What is resting at the equilibrium? Last down close candle. You can basically see how this actually tells me a story that in as much as I'm bullish, I should still beware of this key level. In as much as I'm bullish, beware of this key level. Anything can happen. Maybe some economic data could come out and we could potentially see a decline in price, and this key level will be an area for me to watch very closely. The reason I'll be watching is because it was the last down close candle before expansion that broke this overall structure. Another reason because it's resting at discounts. Another reason because there's an inefficiency. Another reason because there's liquidity, sell-side liquidity, low resistance liquidities, a lot of stop losses, institutional stop losses resting right here. This doesn't mean that there's a guarantee that price is definitely going to come here. But as an analyst, my job is to analyze, use data that I'm seeing on the charts to mark out key levels that will be the best potential areas for a buy. Potential, not certainty. If price comes there, it's going to give me an opportunity to look for a reaction. That means price is coming down to a cheap area. So if I wanted to buy it when it was at 20,000, coming down here at 15,000, massive discount. Now, another thing I said I was going to talk about is we now scale down to the weekly time frame. As you can see on the weekly time frame, we've consistently been trending to the upside, consistently creating lower highs and lower low, lower highs and lower low, lower high, lower low. And pardon me, we've consistently been creating higher highs and higher low, higher high, higher low, higher high, higher low, and a higher high and a higher low and a higher high. We've consistently been creating higher highs, which means we're bullish on weekly time frame. When we came down here, this was an extreme discount zone within the range weekly low, range high. We came down there and you can see how impulsively we rejected off that position. Now, if you've been watching any of my videos when I talk about US 100, I talked about this key level when price came down here. I said this would be my next draw on liquidity. And you look how nicely price came in there. And I said as well in another video, if you're watching my videos, you'll see I said this key level will be the last line of defense. If we're gonna be bearish, it's potentially gonna happen from here. This is the last line of defense for bears, for sellers. This is the last resistance. If price should rally above this inefficiency here, then potentially I won't be surprised if we rally above it. If we rally above this inefficiency here, then I would like to see a new all-time high. But if there's going to be any area that will give us resistance and send us lower to run this low resistance liquidity, it will be this key level. So what am I watching? I start to scale down to daily. And on the daily time frame, while we were consistently creating higher highs and higher low, higher highs and higher low, and a higher high, we drop down to break structure right here. After breaking structure, we have a gap right here. Price came, wicked to low, rallied, gapped open here, dropped down, broke structure, came back for a retest. If we look at this with the line chart to better show us the bodies of the candles only, you can see this bodies of the candle, bodies of the candle. We came up here, but we didn't mitigate the bodies of the candle. We dropped down, price came back up to run liquidity above this key level. And after that, look at this daily, high, low, high, drop, break structure. If we go to 4-hour time frame, we can see very clearer. If I remove everything right here, we'll have a low, we'll have a high, drop down, breaking structure. This isn't a guarantee that price will drop. And if you're watching this video right now, even though I usually just make my videos and just post it almost immediately, this is not an indication for you to look for a sell, because there's a very high chance price will rally above this key level and continue higher. Very high chance. The chances for this to go to the downside is lower, in my opinion, but there's a probability that it will work and will go to the downside. The reason why the probability is there for it to work is because we have a significant low and high on daily that got broken, and price came up here to run liquidity from the daily time frame, mitigating a weekly inefficiency. So we mitigated the weekly inefficiency. We took liquidity from a daily and we broke 4-hour low. So on the higher time frame, on the intraday perspective, yes, it looks solid for us to look for a sell. It looks solid. But from the 3-month time frame perspective, it does not look good to look for a sell. This doesn't look like something to be selling on 3-month time frame perspective. On 6-month time frame perspective, it doesn't look good for a sell. But guess what? We still have inefficiency here. If for any reason we drop off from here, for any reason we drop off, this would be an area to consider for me. And guess what's resting there? Inefficiency on 3-month time frame, 6-month time frame. Guess what's resting there as well? We'll go back to weekly. What's resting there as well is this key level. That same key level aligns with here. From 6 months, 3 months, monthly, weekly, daily. They all align with that position right there. You can see it right there. So this is basically my opinion, and it's not an investment advice. I'm not advising you to go and try to buy this or sell it. It's just my opinion. And if we use the Fibonacci from the overall low to the overall high, you can see this is extreme premium. We came into that extreme premium before displacing to the downside to break that structure. So what I'll watch here, I'll just watch this very closely and see what the market is going to do eventually. Since we've broken this low right here, I'll see if we do see any sort of consolidation into this position. I'll watch it closely to see what price will do, whether it's going to break significant 30 minutes, 1 hour, 15 minute structure, and then I'll see whether it will be something for me to look at for a potential trade idea. So that is my analysis. That is what I'm watching. And you can see right here my checklist. Like I was saying in the beginning, you always need to have a trading plan. You need to have a checklist of things you want to see. And right here, firstly, you can see 7-day gap. If we look at 7-day, you can see a gap here. Gap, 7-day gap. We mitigated it and we're seeing a rejection. Weekly fair value gap. There's a weekly fair value gap right there, 1 week. So these are the things I want to see before I can say, okay, this trade looks solid. Inefficiency, weekly inefficiency. And then price hits an extreme premium. This is an extreme premium. Look, drawing the Fibonacci from the low to the high. Extreme premium zone. We mitigated extreme premium zone. This is the extreme premium zone, the blue line here. Extreme premium, we came in there, mitigated it, and after that we broke 4-hour significant structure. You can see that low high break of structure. Then there's a run on daily liquidity, and if we go to daily, you can see this is daily liquidity, high, low, price came up, ran liquidity from here, ran liquidity from here before breaking that 4-hour structure. And then there's a high resistance liquidity at the new high created, so which is this key level. You can see how this is a high resistance liquidity, and like I always say, if I want to use an area for stop loss, my area of stop loss should be high resistance liquidity. If I want to use an area for take profit, the area for take profit should be low resistance liquidity. And right here, this is what I mean. If this trade should work, if, like I've always said from the beginning of this video, if it should work, this would be the potential area I'll target. Why? Low resistance liquidity is resting right there. That's why it will be my target. Now, another thing is, yeah, low resistance liquidity has a low rose. You can see that right there. And then fair value gap at the 4-hour PUI I want to sell from. And right there, we have a fair value gap at the point of interest I want to sell from if I was to sell. So right here is the 4-hour inefficiency. So I've not placed any order right here. I'm just going to watch this very carefully. I may not still take this trade. I may take it, I may not take it, but I'll be watching it. It just depends on the conditions, the reaction. If price come in here and I see a good reaction, then maybe I'll just put a low risk on it. But if I don't see what I'm looking out to see, I'll just be on the sidelines and allow it to do its thing. So if you enjoyed this one, feel free to like it, leave your comments at the comment section. If you have any questions, leave it at the comment section as well. And until next time, I'll speak to you soon.